Hi, this is James Sugg with Westpac London's end of day report for Thursday the 2nd of August. Well, it was really all about the ECB today and the delivery on the commitment that ECB Chief Draghi made last week to do whatever it takes to save the euro. Now, what he's basically said is that the adherence of governments to their commitments and the fulfilment by the bailout fund of their roles are necessary conditions for the ECB to do what it's going to announce. In other words, it's not just the ECB acting alone. They will act once those other conditions have been fulfilled and the bailout fund is properly up and running. So what the Governing Council is going to do within its mandate of price stability is and in observance of the independence that they have in terms of monetary policy, what they've got are a range of options. I mean, they may undertake outright open market operations of a size adequate to reach its objective. The concerns about the seniority of investors are going to be addressed. The Council may take further non-standard measures. They'll do whatever it takes basically to repair the monetary policy transmission, which has been impaired by the very high yields in some countries like Spain and Italy, right through the curve now, frankly, not just at the long end. So that sounded pretty good in the statement, but when the Q&A got underway, it became more clear that not much detail was going to be forthcoming. For example, I'll just give a couple of examples. These outright open market operations, they're only going to involve short-term securities. That's partly, I suppose, to limit the potential for moral hazard, because if governments don't adhere to their commitments in terms of budget austerity, in terms of reform of their economies, which has to happen to make them more competitive so they can survive long-term in the euro, then it's pretty easy to turn that bond market support off if you're only if you're only supporting the short end of the market. So that was a little bit disappointing. The other things related to creditor seniority, it wasn't really fully spelled out. It was acknowledged that the Bundesbank still had real reservations about bond buying that hadn't necessarily been resolved yet. He talked about the banking license for the ECM. It's a non-starter. For the ESM, sorry, that's going to be a non-starter. Zero rates, they wouldn't happen either. They're uncharted territory for the ECB. So there was a lot of, we'll sort something out in the next few weeks, we'll decide it then, we'll let you know. Not enough detail now, not enough action now for markets, and that's why they sold off quite sharply. I mean, there was only really the barest hint of the big bazooka that I think many participants were hoping for, given what Draghi said last week. So the market reaction to that, I mean, the Spanish stock market was down 4%, Spanish 10-year bond yields up 40 basis points today. So a partial unwind of the, but not complete unwind of the rally that we've seen over the last week in those markets. What I would say is that on his first meeting, Draghi cut rates. On his second meeting, he announced effectively a trillion expansion of the ECB's lending balance sheet, funded by the balance sheet to the banking sector to head off the credit freeze or the interbank lending freeze that was emerging at the end of last year. I mean, he's delivered in the past, and he's kind of implied that in the next few weeks he'll deliver again. So we'll have to wait and see on that one, unfortunately. In other news today, just a small rise in initial jobless claims in the US, still distorted, those figures, by the summer shutdown issue that pops up every year. Factory goods orders were down 0.5% in June, weakness in the non-durable component. And the Bank of England was on hold at 0.5% and no change to their $375 billion target for the asset purchase program. There's the quarterly inflation projections will be presented by Governor Mervyn King next week, so we'll learn a bit more about their thinking there. So that was really it. The disappointment of the ECB was the big story of the day. Just on the markets then, the London market down 0.9%, the French market down 2.7%, the Germans off 2.2%, and the Spanish market in the end off actually 5.2% today, although the fairly immediate reaction, as I said earlier, was a 4% drop like that. The Italian market down 4.5% today as well, and at the moment the Dow is down 1.1%. It's 5:30 in London at the moment in the afternoon. The Dow's at 12,827 at the moment. Commodity markets are weaker, so copper is off 1.8% today, oil off 1.2% at $87.86 a barrel, and a 0.8% drop in the gold price to $1,594 an ounce. The Aussie dollar, it spiked to 1.058 against the US dollar on the very early part of the statement that the ECB chief read out. It sounded good at the start, but then it fell away quite sharply after that, down 1.4 cents actually to 104.4 at the moment. Okay, no Aussie data to watch out for on Friday, so all we've got now really for this week is the US jobs numbers, where we're looking for a week 70,000 increase in non-farm payrolls. Okay, we're back tomorrow with a discussion of that. See you then.